Well, good morning. My name is Chris McKee. I am the CEO and owner of the PRS Group, and I'd also like to say good evening from a chilly but clear New York City, where this is being recorded. Before I begin, I just want to say a couple of thank yous to the Academy of Public Administration under the President and the Agency for the Republic for Civil Service Affairs for inviting me to speak to you this morning. And I'm sorry again that I couldn't be there to join you. I think next time we'll be able to meet on a more intimate basis, but at least this is where technology tends to bring people together. In any case, given that the topic of this morning's panel discussion is titled Business, Civil Society, and NGOs as Anti-Corruption Allies, I'd like to talk to you about this topic from the perspective of a private company that has been involved in the field of political and country risk assessment for the better part of 4 decades. Our clients include some of the world's largest institutional investors, private equity funds, sovereign wealth funds, transnational corporations, and of course leading research scientists at various universities. PRS is also one of, I think, a dozen companies that, at least from our perspective for the last 20 years, has provided data to Transparency International that goes into that organization's annual Corruption Perceptions Index. On the investor and multinational side of the equation, one thing I should tell you is that I hear quite often from these groups and their analysts and their managers, and they provide a very valuable service to PRS and to me in particular of reporting on the challenges that they face in investing and doing business in emerging and frontier markets. During the course of our discussions, they asked me about the rankings of certain countries, why some are moving up, why others are moving down, and we also have a lot of disagreements as well. Some of the fund managers think we're sometimes a little too hard on countries, other times it's the reverse. But the point is that's a very engaging process, and it's one that is valuable in this sense to both parties. And it is the dealings, or these kinds of dealings, that in turn inform my discussions with the public side of our clientele, with my discussions with the World Bank, with the IMF, and the UN. So, in this sense, this idea of an alliance of sorts between business, civil society, and I guess the NGO world is nothing new, and it's encapsulated in the work that we do. It works. That's essentially how we do it. I hear from all sides, and it's incredibly rewarding and instructive for our work. And the thing is that when we subject these kinds of ideas and reports and quantify them and subject them to our methodology, the insights that we tend to produce are relevant to those involved. They provide useful information, in this case, for public organizations that are charged with the goal of eradicating graft. As an example, the IMF a couple of years ago, and I believe it was the Africa division, looked at our corruption scores, and they found that a 1 point increase in a country's rating, which means there was less risk, translated into a 1 percentage point increase in a country's GNP. That's significant, and this is the kind of stuff that really drives our work. So let me use these kinds of ideas as a stepping off point for what I'm going to talk about for the next little while, about corruption and business. And then I'll give you my thoughts on how Kazakhstan appears to be fairly well positioned to attract additional investment flows in the years ahead, and I'll conclude with my impressions of Kazakhstan's recent efforts to eradicate graft. So let me talk about corruption, at least in thematic terms. Well, the first thing I want to say is that corruption, that is the extent to which it shapes business and investment decisions, clearly varies across countries and across time. In other words, while addressing corrupt practices is much more accepted now than it was when I first became involved in this field back in the 1990s, it remains clear that corruption is seen differently in different jurisdictions. In other words, what is corrupt in North America or in Western Europe may not be seen the same way, at least on an operational level, in Latin America, parts of the Middle East, or even parts of Africa. There's a historical and developmental element to all of this, and I think it's one that's wrapped up largely in cultural norms. Of course, business knows this, investors know this, and to some extent, they can adapt, and they've been adapting for years in doing deals in different and sometimes foreign jurisdictions. But the problem is this distinction certainly doesn't help encourage investment flows, rather, at least on a consistent basis. And this is important now as the emerging and frontier market class becomes more mainstream. In other words, the push for more uniform arrangements to fight graft and more accommodating governments, rather, has become all the more important as investors from all stripes become, more important to the understanding of the asset class. And I can tell you of the investors that I speak to on a regular basis, the presence of an accepted and effective anti-corruption reform agenda, one where there is transparency and widely accepted methods and accomplishments, is really well received. It gives them a locus, as it were, should the investment process get hung up at some stage, and it provides them with some measure of accountability, if you will, in the entities that are responsible for the jurisdiction. And because PRS looks at corruption from a number of different angles and uses varied risk metrics to analyze the condition, as it were, and given that there is a feedback mechanism with our clients and the markets, we tend to develop a very accurate but also very nuanced assessment for each of the 150 countries that we cover. Excuse me, the other item I want to mention is that while a stable and transparent investment climate is clearly key to attracting and retaining capital, so too is what the country rather offers in terms of opportunities. And in my opinion, and I think this is the opinion of most, it's really the opportunities that drive the investment process. Investment climate is important, but it can be shaped. And I can tell you that Kazakhstan does figure now quite heavily in the decision of investors, at least the ones that I speak to, especially now that parts of the commodity sector are gaining in strength. And here, as you can probably guess, I'm talking about uranium and the demand from such places as Saudi Arabia and China. And the IPO that went off earlier last month, of course, was well received. And the momentum this sector provides, I think, creates an ideal opportunity to showcase other areas of investment to those interested in committing capital to Kazakhstan. And so these two conditions, on the one hand, an improving investment climate, and on the other, opportunities for growth, come at a really pivotal time, I think. And we're at a stage right now where we all know that global growth is slowing down, that it's being complicated for the most part by monetary policy in the U.S. that is still quite restrictive, if you will. Trade tensions between the U.S. and China, and I would think, to be honest, a measure of unpredictability from the Trump administration. So, those two items puts, nonetheless, Kazakhstan in a good position to weather the slowdown. Growth, attractive investment climate. And I think if these reforms that have been made to date continue, you're certainly in good stead. So let me round up things with the last couple of minutes that I have by commenting on some of the initiatives that the Academy has put into place of late. One is the anti-corruption support system that is being offered to investors through various stages of the investment process. The Academy in its literature talks about some 200 projects involving local and foreign investors to the tune of about $16 billion in investment. Excuse me, that's sizable, and that's good. And that investors from a range of countries involved is really good news too. And this is the kind of support that I was talking about earlier when I mentioned that investors offered a premium, if you will, for help so that their investment strategies don't get derailed through the life of the project. Years ago, I was in Egypt, and there was a similar program or vehicle that was being introduced by one of the northern entities. It was a one-stop shop, if you will, for investors. And I can tell you one thing, though, it was extremely successful. And it was successful because, among other things, it gave business the confidence that they could commit their efforts to the longer term, that someone had their back, that the government or the public agencies that were helping them along through the investment process and in understanding some of the bureaucratic hurdles had their back. They weren't going to abandon them or leave them, hanging. The other initiative worthy of mention is the Digital Agent mobile application, I think, which allows Kazakhstanis to inform the agency about the quality of service in tax and other government centers. And frankly, this is the kind of transparency and accountability I think should be offered in most countries, including the United States, but it's really quite valuable. So I applaud you on this, and I wish you the best in the future. And I think from a rating agency perspective, from my discussions with businesses operating in the country, and indeed with my dealings with the Academy on a regular basis, you're on the right track. And I know clearly foreign capital has taken notice. So with that, I'm going to sign off. I'm going to say goodbye again from a chilly but clear evening in New York City, and I really look forward to meeting you all more personally in the future. Okay, so keep well, good night, enjoy the rest of the conference, and I will talk to you soon.